going on? Chris here. Covey Portfolio Performance Summary. It's not loading up correctly, but last I saw, we are around zero point 0.4 on the equity. We're just kind of hovering around zero point 0.4, and we're waiting for the market to flip down. And we're getting close. As far as like a topping signal, we're super close to getting a double yellow band going like we did here. We just need one more yellow band on the 12 hour, and then we're golden for a topping signal. And then Ninja Portfolio Performance Summary. This is correct as of yesterday. So today, these were the accounts that I traded today. We lost roughly 380, 390, and I basically got that back. It kind of reset, but 50,323. So that was roughly what got added to the 48,000. This is the account balance. This is the account balance right here. So basically $300 to each account, each of these two accounts. And these are my risk on accounts. 1/3, 2/3, 1/3 fast signal, 2/3 slow signal. So the slow signal's coming up. We thought it was earlier on Tuesday, but that wasn't the case. What ended up tripping me, that led me to a path of discovery, which has led me to this measured move indicator, is now that I know this, it kind of puts in this measured move. And if I would have saw this earlier, I would have de-risked right here. And instead, I added more risk, and that's what killed me. But here is the anticipated move on the SP500 all the way up here. We'll see if we get it. But that's kind of what killed me here. And then this is the live accounts. I got two of them. And the goal is to make sure we don't drop down too much. Go nice and slow. I mean, there's no monthly rebill, and we could wait for some high quality signals, and that's what we're going to do. We're going to treat that this is just slow signal, just because I want this to grow and I don't want it to lose. I want a high win rate for that right now, and I'll take it until I start getting more accounts. Okay, just starting at the top, we are heavily short on the S&P 500 according to the money flow index, Williams money flow index, which is represents institutional position short. And then looking at the timing solutions on the S&P 500, the Q Spectrum 2 finally changed to where now we're at a peak on the Q Spectrum 2, which is this red line. And then this annual is peaking around February. I'm starting to think that this is correct and that this is wrong. Not 100% sure, but we'll find out leading into next week. But according to the decennial, we've already begun rolling over. But as far as like topping out on the oscillator and the topping out signal, we got another yellow band. We need both of them to show on the 12 hour and 8 hour. So we are really close to topping out. We just need to see it here. And preferably, in an ideal world, we'll stop out these highs, come back below, and then we'll start to break down. And it might be to where February is the real thing. If we were to check back here again, the Q Spectrum 2 is a little weird, but it does change from day to day. But we'll see going into Thursday and Friday if this still holds true on the Q Spectrum 2. It's something I'm willing to take serious on the market structure, especially in the 15-minute market structure breakdown. I want it to definitely reach this Fibonacci fake out zone, which is right there. And if you wanted to see it in a different view, it's roughly... Oh, this is the hourly. It's roughly here. We just take out the highs, we reject here, and ultimately it would show up as a wick on the 8 hour, and we would poke our head above the previous day high, and maybe even this high, and it looks like we're going to get stopped by one of these two things. And then the idea is we would get rejected up here, and then come back below the daily open, and then the previous week high, and then take out this diagonal trend line, and then this weekly open, get below that, unless the weekly open moves. But for the most part, this is the line that we're going to be watching. If a steeper one presents itself, we'll be watching that one as well. But in terms of looking at the weekly and daily, we are in the cut. We are deep in there, and we're at resistance. We have not closed above. We need to close the week above here for us to be bullish. If we do not close the week above here, we are not bullish. We are ready to short. We're getting the best shorting opportunity ever, which is going to be at that fake out zone, roughly right here, if we are able to get it. And that's the idea. We're heavy into the bull trap, and I think Jim Cramer is like really crazy bullish right now, so it works out. And we're at daily resistance, so it looks deceiving on the weekly that we're pushing the bounds here, and those bears are getting beaten back. But if you look at the daily resistance, man, it's stacking up. It's showing some high resistance, and it's the daily closes that matter here right now. It's the daily closes. If we keep on closing the dailies at below here, it's not going anywhere, right? So it's going to be interesting. We're going to be looking for some rejection up in here, and then a waterfall down. Head, shoulder, like left shoulder, head, deviation, right shoulder. That's it. That's what we're looking for. Oil is weird. Like I got signals that it was breaking down. Let's go ahead and take a look here. Looks like we reclaimed the bottom. Deviation, left shoulder. We're trying to form the right shoulder. We'll see where we close on the week. It's uncertain, but as far as like institutional buys, they're short, as far as I know. And then we've been getting some signals that market structure was breaking. So it was a sign of relief for me. We broke down here, but then we somehow escaped here. Well, that's gold. I knew it broke down. I'm like, I know it just broke down. There's no way it could have escaped. Yeah, so right there, we broke down. Look at the 12-hour. We're still above the bullish 12-hour. And this is the thing that really needs to break for us to start waterfalling down. But if oil starts to just start sinking, then yeah, it's going down. If we get a 12-hour market structure break here, it's pretty much done. Same here with SP500. This is something we're looking to see if it moves a little higher, to see if it's like these lows that get taken out or something. But I think we won't really know until it finally makes that push higher, and then this will start moving up too. But we would want to see this move up, so then it would just need a breakdown here, retest, boom, done. But that's ultimately what we want to see, is a break of this 12-hour market structure break. The 4-hour is nice because, I don't know, it gets you in quicker, but see, this one, it can trick you. I did not take the short from here. I only listened to the 12-hour because it is the most filtered one that will prevent you from having a loss, from not being right. But this 15-minute was awesome on the way up. Definitely got a long in there, and then got a short in here on the way down here. Tuesday rocked me with this crazy whip, and then it was here. Got rocked. Like, I missed my opportunity to go short on the 50% of the breaker that was here, and then I wanted to just go short more. Got rocked here, and then made some money on the way down here, and $100 worth, and then I think $200 on the way up, roughly. So we were able to get back the loss from here. But yeah, and as soon as we broke this, I just immediately stopped. Like, this was crazy chop right here. This was chop land. But yeah, no, we wanted to go in the fake out zone and then get rejected, and that's what we want. But enough of the SP500. It seems like that's all I talk about. Credit spreads and then the currency. Credit spreads holding beneath the deviation. As long as it holds beneath the deviation, it's a good risk to reward play. We're wrong if we close the week above there. If not, it's a really good setup for a short. Risk to reward to the downside. And then Euro. So this is something we're watching closely. Any kind of breakdown is going to signal basically a foreshadowing of what's to come. And the weekly close is also going to foreshadow a lot to come. But we're at weekly resistance, and we're waiting to see what happens next. We got this huge ascending wedge. I mean, we could try putting it with the 8-hour here on that Euro and see what we see. Looks like this is the trend line right here. So it's going to slowly, I guess, go sideways and just stay above, and then could just drop down. Who knows? But for just entertainment's sakes, we'll see if this provides a setup, the one we want. Where's this leaning up against? There we go. And then we'll send an alarm. Okay. And then Japanese yen still staying alive. It's the most complicated thing ever, this Japanese yen. Yeah, it's still over it hasn't broken this 12-hour market structure break. The euro just got a new one, new 12-hour market structure, and we're looking to see if we break that. And then left shoulder, deviation, right shoulder, boom. And then, yeah, the Japanese yen, and then the VIX, 12-hour, still being rejected, but we're back at the lows and prime launch pad point for breaking that 12-hour market structure break, filling this gap on a solid body candle. That would be something really welcomed for my Covey portfolio, because the 100% of it is in the VIX. So we need that VIX to go up, so then my portfolio could be in the green and there'll be no worries at all. If the VIX were to drop any lower, I would be in trouble. Like, anything below, I think 19, I'd be in trouble. But we're gonna let the chips fall where they may. All right, so that's pretty much it. Just closing thoughts. I know the AI, whether it's Chat GPT or Mid Journey and that image AI, or if you go to, I think Clean Buddies or something. They got all this AI stuff, and it's starting to get really popular. We were talking about Robot Revolution portfolio before it was popular. It's just, now is not the time to buy. You want to buy when market is in distress, and that's coming. And when we start seeing a huge drop to our target, then we'll start talking about it, because it's something to get excited about when it starts making progress to it. We can't put the cart before the horse type of thing. And then we'll talk about trade plan. It's basically related to the trade plan once we dip in the market for the bullish view in the Covey portfolio. Right now we got a bearish view in terms of like a quarterly outlook, and we want a bullish outlook. It's just we got to do it in that sequence. We got to go bearish before we could go bullish. And then we're not talking about any hard landing, soft landing stuff. We're not doing that. We're doing market structure. We're going to talk about when it flips. No hard landing, soft landing crap. Because that stuff, I don't know. People get caught up on that. And just the talk about the future and predicting it. And I use forecast models. But when it comes to a bottom, you just don't forecast it. You just like, okay, if there was a chance for a swing to the bottom, when is it going to be? Okay, now they were heading towards a high probability point where it could swing to the bottom. what are we going to look for in a market structure break that would signal the bottom is likely in? And that's what we're going to do. We're going to do a scale out on the market structure break. We'll do a 12-hour market structure break scale out first, and then a weekly if we can, or a daily. And that's how we'll do it. A 12-hour and a daily market structure break will tell us when to get out. But deciding where it's going to fall to, there's no reason to do that. Like, I mean, I have my targets. Targets, you could reach them and you may not reach them. And it's kind of just how frivolous it is. You could reach them, you may not reach it. It might be a soft landing, it may not be a hard landing. You should just be prepared for both, right? And then video about entry alpha for investors. That's something I've been wanting to get to. Right now, I've been putting in a lot of hours for the NCLEX. Chat GPT's got a study plan for me. It's got, like, at the end of 4 weeks, I'm supposed to be doing 500 questions in a day. So I don't know. I'm really trying to make sure I can keep up with the volume of questions that this thing's gotten me doing every day. But when we get closer to like a day off, maybe I can make a video like this Saturday. And then I already remade this video, but I decided, you know what, we're not going to include that just because it's kind of assumed to have a good trading system. It's just some people need the time to figure it out. It's just not given to you, and part of being on the front lines is doing your own research, doing your own work to find the edge. And its edge is just not going to be given to you. It's something that has to be earned, and whether it's through trying to pry it out of those who earned it or putting in the work yourself. Like, someone who's put in the work is not going to give it to anybody who just cries for it. It's just something you got, in order to really value what you found and make good scientific method theses or hypotheses. You have to be totally ownership. You have to have complete ownership of your own work, of your own assessments, and be able to make progress with your theses and with your conclusions and be able to find proof that that's the way it is. There's just no way somebody's going to hand you alpha like that. But I will make a video instead of the trading system, an entry alpha. It's a small part of the trading system, but it's still something that will be really interesting for me to make, because it's a little bit of a thesis as well. And but in terms of a trading system, I'm not going to give. I have documented a lot of what I do for analysis, but it's not my trading system. So thanks for watching. See you in the next video.